theme of this session is around, let's say, shadow networks, specifically from a trade lens. How are you seeing the risks change and evolve within that space?
One day you have embargoes on oil, the next you're able to import it, and then the next you're potentially exposed to secondary sanctions at the same time.
You need to look at holistically, capturing entities somewhere and vessels somewhere, tracked somewhere. So that is the main problem of fragmentation of data, right? So how do we consolidate that?
How are you seeing AI being actually used from a technical standpoint?
Detection, prioritization, and then putting the governance structure so that it's really applicable.
Trade risks are no longer straightforward. As global supply chains become more fragmented and opaque, organizations are facing increasing exposure across counterparties, routing, and especially the geopolitical risks that we are seeing. What we're also observing is that no longer transaction-based screening can be applied to your trade risk frameworks. It has to move towards a network-based approach with the capabilities around AI augmenting the risk professionals in the current day and age. So in this discussion, we'll be unpacking the trade risks, the evolution, and what are the tools out there that can help trade compliance and trade risk professionals in keeping up to those challenges, specifically from the AI lens as well. Hi everyone and welcome. Really excited to be here today. We'll be discussing about trade risks in 2026, supply chain, shadow networks, and geopolitical disruptions. And joining me today are Patrick and Puneet. We have a lot to unpack, a really exciting conversation lined ahead. But before we get started, can we please have a quick introduction?
Hi, I'm Puneet Mathur. I'm leading the trade compliance portfolio at LexisNexis Solution, working closely with customer, understanding their pain points and delivering solution into the trade compliance space.
Hi everyone, my name is Patrick Wyther. I represent LexisNexis for Solutions as a market planning director for our financial crime compliance suite of products.
Thank you. So Patrick, if I could just start with you, what are the biggest shifts that you are observing within not just APAC, but let's say from a global viewpoint, and specifically around the recent geopolitical turmoils that we have seen around the region, right? So what are your observations?
I think it's the volume of change and activity, particularly over the last year. Obviously, you've had a very active US administration, and increasingly so when it comes to the hot war that we're now seeing in the Middle East and the flow-on effects of the long-standing conflict we've seen in Ukraine as well. So I'd say there's a lot of difficulties for institutions to monitor and comply with the ever-changing landscape. One day you have embargoes on oil, the next you're able to import it, and then the next you're potentially exposed to secondary sanctions at the same time. So I think that kind of geopolitical external landscape monitoring is really, really important. Of course, over the last year, you've seen a really active rise in the use of tariffs as a foreign policy tool by the US. In some ways, in a similar manner to the way that sanctions and export controls have been used as a tool as well to advance those policy goals. So with that, you've seen a rise in the manufacturing and shipping through some of the lesser tariff jurisdictions as well. So you see the shifting of trade and supply chains. And that, of course, can open up new angles of risk to monitor for those institutions that have quite a global exposure, either in their supply chains or in their the presence of their institutions. The other aspect I'd touch on is with trade, the increasing use of free trade zones and the difficulty of obtaining information about the source and destination of some shipments as well. There's not always perfect information on these trade flows. So when it comes to monitoring trade-based money laundering and meeting these compliance obligations, it can be quite tricky when you have imperfect information. And of course, there's a significant volume of diverted trade as well, which can ratchet up that threat level as well. Through the use of opaque corporate structures, it can be quite tricky for institutions to really assess the nature and purpose and the legitimacy of certain trade. I think the cross-jurisdictional nature of these corporate structures makes it very tricky to unpick these ultimate beneficial ownership exposures and to look at whether something is economically explainable, if you take into account the bigger picture. The other area I'm seeing an increased threat is, of course, the use of AI by criminal actors in order to create false narratives around trade, to create false documentation, to establish fake email chains, fake documentation, and ultimately a fake context in order to veil over the illicit activity that's taking place through that trade.
Thanks, Pat. I think you've raised some pertinent points in terms of the dynamism within the sanctions regime, which is affecting trade, and also how complex the situation is becoming. Also, the changing part of the foreign policy vectors, where tariffs and other regimes are now being kind of inbuilt into a foreign policy for any large country. But if we were to kind of take a deep dive into what the theme of this session is around, let's say, shadow networks, specifically from a trade lens, how are you seeing the risks change and evolve within that space, Patrick?
Off the back of the conflict that we've seen in the Middle East, we've seen increasing use of very convoluted corporate structures and various techniques to obfuscate trade flows. Of course, there's been a lot of sanctions activity, restrictions around certain goods, and of course evasion of AML and CTF controls through the use of the ever-present trade-based money laundering threat vector. I'd say what we've seen is a lot of use of international and cross-jurisdictional corporate structures in order to layer and obfuscate the real nature and purpose of these entities and the trade in which they facilitate. There's also significant use of kind of informal value transfer systems and the use of underground banking as well, on top of the use of cryptocurrencies and privacy-preserving technology in order to bypass the traditional financial system and some of those more internationally utilized payment rails, such as the SWIFT network, where a lot of those institutional controls sit, and there's perhaps more visibility in order to catch some of the illicit activity. In terms of the physical movement of goods, this is supported by what's called shadow fleets. So these are typically older vessels, maybe not insured, and typically run by adversarial regimes. And they facilitate the flow of illicit goods through a range of activities such as flag hopping, that is using various flags of convenience and changing very frequently, both the flags and the name of the vessel as well, to evade some of those name screening techniques. You also see, in terms of the physical activity in international waters, ship-to-ship transfers and creating multiple hops and transfers of cargo and goods from one vessel to another. And that makes it more and more difficult to track the actual activity that these shadow fleets are carrying out. All of this activity helps to support the evasion of sanctions, export controls, and to carry out illicit trade through these trade-based money laundering techniques. More specifically, the process of creating a kind of a false or a guise on a trade transaction to bring illicit funds back to the country of origin.
So Puneet, with the current context and contours that Pat highlighted in terms of, let's say, some of the complexities and challenges within your role and the viewpoint that you have in your conversations with, let's say, several of our key customers and the regulators across the region, what are the key challenges, if we were to kind of summarize and on the context of what Pat built, what are the challenges that you are seeing the organizations are facing in what sounds like a pretty dynamic and challenging environment?
In terms of when we speak to customers and we really understand what is happening in their end, right now they are also kind of try to look at holistically. So if I look back a couple of years back, they were just looking at, okay, I got a transaction, I got some individuals, entities, I screen and my job is done. But that's not applicable now, right? Because you need to look at holistically. So I think the challenges which we see is, one is the data is fragmented, right? So within the organization, I'm capturing trade into multiple systems, right? So I'm capturing entities somewhere and vessels somewhere, tracked somewhere. So that is the main problem of fragmentation of data, right? So how do we consolidate that? So that's one of the key challenges, fragmentation of data. Then the kind of volumes as well, right? The volumes of transaction you deal with, and on each transaction, the volumes of alerts you deal with, right? So that's another problem, because I need to deal with a lot of volumes of alert, and then I miss where the real risks lie. So you kind of navigate through a lot of alerts, but eventually ending up not identifying what is the real risk, right? That's where I call it as noise versus signal, which is very important, and that's one of the key challenges, right? In addition to that, I think when we talk about hidden sanction exposure, where you are looking at vessels, you're looking at counterparties, and you're looking at layer one, right? But once you start removing the layers and look inside it, then you realize, okay, now I see the network, right? Where the really I'm exposing to a sanction or a money laundering case or whatnot, right? Meaning the owners of the vessels is fine, but then maybe a technical manager or secondary owner of a vessel is linked to a sanctioned activity, not sanctioned, but linked to a sanctioned. Those calls are hidden risk, which customers are really kind of trying to find out now, looking at it holistically. So I think, again, just to summarize it, like fragmentation of data and hidden exposure to sanction, and the volumes you are dealing with. So at the end, it's actually looking at it holistically and trying to identify, okay, am I looking at the point, or can I really look at the whole transaction, so that I can really identify where I really need to look to identify what is missing, right? It's not about just looking at a point, but looking at a whole picture to get really, okay, these are the possible risk associated or risk as per my policies.
That's really interesting. So if we take this conversation forward, I think one thing which is very clear and emerging is that from an APAC context, trade is very important. Given the island economies that we have and the developing nations that we're surrounded with, I think trade is an important part, an integral part of a nation's economy. But if you kind of take this a little forward, and Pat, if I could pick your brain on what we've been discussing, let's say around identifying indirect risks across a trade transaction and the whole life cycle, be it across counterparties, ownership, and the other components of a trade, like what do you think organizations can kind of do better, or what are they struggling with at the moment?
I think it's around the availability of data and having a comprehensive view of a trade transaction. And one of the fundamental different aspects of a trade transaction is the length of time that it takes out in order to monitor right from the beginning, and the financing and the documentation and processing through to the completion and manufacturing and shipment of these goods. A lot of things change over the period of a trade life cycle, and the availability of data, and in particular the availability of real-time or up-to-date data, is particularly important. There is, of course, a requirement to monitor the indirect exposures of some of these entities through the likes of the 50% rule under sanctions, and BI's 50%, albeit its current freezing, that's due to come back online later this year. And so having access to real up-to-date corporate information is very important. And through the actual physical shipment of the goods, does the activity taking place in real life match the documentation? The last point I'll touch on is geopolitical in nature. The trade routes, supply chains, these are changing really, really rapidly. And that opens up new risks as well when it comes to detecting what is legitimate and what is illicit.
So Puneet, if I could bring this conversation to you, I mean, with the challenges and the difficulties and the various contours, be it in terms of the volumes that you just highlighted, it's also about kind of not just identifying the risk, but also connecting the dots and kind of making a good an informed decision out of it. So where does the role of technology and specifically, let's say, data analytics into this dimension is going forward, and how can organizations kind of better use this technologies to uncover the risks that are there, and specifically the hidden risks and indirect risks that we've been talking about?
Yeah, I think Pat touched on a couple of good points around, looking at it holistically, and then there are so many counterparties and vessels and goods are involved. And as the transaction moves, things are changing, right? Particularly around shipment tracking, right? Where containers are moving and you're tracking one vessel, but suddenly your goods is not on that vessel. That makes no sense, right? Because I'm tracking something where my goods are already being shipped, right? Data is very key here in terms of what you have in terms of documents which you receive from customer. So you are capturing a lot of information, right? So that is the base, right? You need to build on top of that what kind of, we call data analytics. But I think there is a lot of work to be done in that area when we talk about, I've received one trade document. So I've captured vessel name or IMOs or maybe goods at that point. Okay, that's my data stored somewhere, right? And then in the next document, maybe bill of lading came in, right? Or maybe some invoice came in. So I'm capturing now pricing and all those things, right? So we need to kind of connect all this and put together, right? So I'm not looking each individually data points, but I'm looking at, okay, these are the vessels, these are their routes, how they are connected, right? Is there a hidden behavior under it, right? Or is there a goods, right? And then the price of that goods, are those matching or not, right? So looking at like connecting those things with vessels, movements, goods, counterparties, their changes, their nature, the ownership I talk about. So kind of combining that. So that's one part, right? You are now trying to collate everything and making a system out of it. I think that's the first step, right? And moving on to that, right? It's about identifying. Humanly, it's really impossible to look at all this noise, as I said earlier, or all these signals, right? All these anomalies, right? Because you're dealing with hundreds of transactions or thousands of transactions. That's where data can come in, and analytics built on top of it to identify those anomalies, right? Really looking through all these transactions and patterns or signals to start making a kind of a meaning out of it, right? That, okay, I see anomalies in pricing, I see anomalies in movement behavior, or maybe on the container movement, right? So those will be on top of what you have collected as data, and then on top of analytics. So you start getting a good picture out of it, right? And then I think third is you got all this. Now you are building about, okay, now let's talk about systems, right? How we can build system out of it. As we get this all data connected, it's easier to build, get some more knowledge or more meaningful insight out of it, right? Because if there are missing pieces, so whatever analytics you do, it will always miss something, right? So there is a step-by-step process that, okay, you have completed your data mapping, then you have also kind of empowering the analyst not to spend time on looking manually, but using analytics to get anomalies out and look at where the risk lies, right? And then this kind of a model and all those things start coming into the picture once you have sorted this analytics piece out, so that it's become easier, and your processes will flow accordingly, so that you can really look at not just the surface risk but also the hidden risk. And a lot of organizations are working towards that in terms of getting gauge of. I think there are a lot of hirings are also happening in this space, because this is kind of booming, and given Gen AI and AI is coming into the picture, and everyone is investing there. That helps a lot, because the stepping stone is done in terms of data and analytics. On top of that is models, right? And how this model can help you really identify not the surface level risk, but the hidden risk as well.
Yeah. And then you touched upon, AI, it's brought up in the previous conversation as well that we had. So from a practicality perspective, if you were to give some advice to our viewers and listeners, how are you seeing AI being actually used or deployed from a technical standpoint, from a trade compliance or a risk assessment perspective?
AI can help in multiple ways, right? Throughout this podcast is about, okay, are we able to identify those risks, right? So the key is detection. So can I really use model to detect more quality result? I want quality result, right? I already have noise. Through analytics and all those things, I'm trying to suppress the noise, right? So one is detection, and then second is prioritization, right? How do I prioritize? So these models will really help to identify and uncover the hidden risk, which will improve my detection and give me quality alerts, right? But having said that, that means you will have a lot of volumes as well, right? So how do I handle it? So that's where also AI can come in and help. I will prioritize for you, right? Because I see signals, I see your data lag, which you have built over all this trade data or even financial crime data, connections and all those things. So I can prioritize as a model that, okay, what you need to review now and what can be parked later. So it's one, detection, and then prioritization. I think these are the two key areas where, AI can really come and help it. And in addition to that, looking at the patterns, right? So this is like my day-to-day normal process, and then looking at the patterns. But AI also comes with, a lot of questions nowadays, where, people talk about, okay, how do you validate the model, right? What do you do about it? And then you have to, this is a regulatory space. We are not a tech company where we apply model and we do some magic and, it's not, I'm generating leads or I'm doing something like, it's not P2C or e-commerce, right? Here, it's actually a regulatory space where you need to explain it, right? So governance is another key where AI, when you build AI solution, you need to make sure that what is the governance model behind it, how do you apply it, and all those things. So I think that's where AI coming in terms of just kind of emphasizing again detection, prioritization, and then putting a governance structure so that it's really applicable. So you will test, and we do a lot of testing with customer. Results are fantastic and good, but eventually it's failing in the governance, right? No use in this regulatory world, right? So we need to make sure that whatever we are building, how we are governing it, how the models are grounded, and they are not biased, right? Because again, that goes back to data quality, right? So if the data quality is well structured and there are removed biases, at least known biases are being removed, then the model will work very well. Otherwise, it will amplify everything, which have no use for you, and it will create more problem than solving the problem. So yeah, I think there are practical use of it, and customers and industries are trying it. And with these LLMs and GenAI models, obviously they are very powerful. They are trained on millions and billions of kind of metadata. So that helps a lot to expedite things. But again, going back to the regulatory space, just to make sure that where we stand and how we are handling this in terms of a framework and explainability kind of thing.
So Puneet, you touched upon AI and the data models that are evolving, and I'm sure that's kind of helping the organizations out there quite a lot. From your viewpoint, what are the practical use cases of AI that you are seeing out there in the market, talking to a lot of customers, which are helping the compliance and the risk professionals within these organizations from a trade lens?
AI technology is now no more a buzzword, right? It's kind of practically applied in various organizations, right? I think especially for trade compliance or trade-based money laundering space, because we are dealing with a lot of data and a lot of data points, it makes sense to apply intelligence rather than manually, which we are doing for years. It's not practical anymore, right? And given the trade volumes and everything increasing, it's really tough for an analyst to really do it, right? So I think the models which can help us in multiple ways. I will start with detection first, right? So this AI model can really look under the hood in the network and identify, real insight, get real insight from it. So that is kind of improving your detection capability where the hidden risks are or where the surface risks are, right? So that's one area, core area to look at. But when we do that, that also gives us a lot of noise, which I talked about, right? Those are basically, now I have a lot of alerts to look at. Okay, what do I do? How do I handle those, right? That's where also AI can come in and help you to prioritize, right? That, okay, why I think like risk scoring, or there are so many other mechanisms, or depending on what is, a user want, or as a bank wants in terms of their policies, they can really define, okay, what is the prioritization metrics for me? Is vessel movement or vessel behavior is more risky for me, or is a container behavior, or is the hidden network is more risky for me? Accordingly, alerts can get prioritized. You need to give those insight or those information to the AI model so that they can really, prioritize it for you. At one angle, it's try to capture everything for you. On the other hand, it's also prioritizing it for you depending on your risk policy, right? In addition to that, what Pat touched on, right, shadow network and all those things, that is also where AI can come in and connect the dots. That, okay, what is missed, how the goods are physically moved. It's not a normal behavior. So where they talked about behavioral pattern, right, where also AI can come in and look at start surfacing those things. So I think these are the kind of key areas where AI can be very useful and meaningful and make your operational processes a bit faster and streamline a lot of unnecessary areas where you're spending time, where you should be looking, as an analyst, you should be looking at something which is more critical, right? So it can prioritize in that fashion, which will give you a lot of areas where you catch the bad guys eventually, right? So that's the idea. To AI will detect, prioritize, and surface, right? That what is happening overall in this transition, not at a surface level, but also at a layer down.
And then while there are a lot of opportunities around the dimensions of AI that you mentioned, because we're in the regulatory compliance space, We don't want the black box approach, which generally AI models are compared with. So if we talk about, let's say, some governance considerations that an organization has to implement no matter where they are in their AI adoption journey, what will be your recommendation?
That's a very good point, right? This is the regulatory space, and AI models are being used widely in various industries, right? For industries like banking and financial institution and whatnot, right, where we have a proper processes in place, right? So I think, as you touched on black box, AI model, the truths being said, right, it cannot be fully explainable, right? But what explainability means, right? So that is the key. So we need to understand that how much explainability we want and up to what level and why we need it, right? What is the reason, right? So, but putting that together, I think first fundamentally we need to understand how this AI model works, right? Are we have good clarity on this, right? Like LLMs, they hallucinate, right? And people talk about hallucination a lot, right? That, okay, I give input 3 times, it gives me output 3 times differently, but maybe saying the same thing or different, right? But I think that's where all these things comes in, where you put governance in place. And we don't want AI to make decisions here, right? We want AI to help and enable human. So all this human augmentation is basically AI can help in, right? So key is explainability and human in loop, right? So I think even MA's recent publication around it, that they want to be people accountable for it, right? That whatever model you're using, but you have really reviewed it thoroughly and understood it, so that you will be accountable on these decisions, right? So the idea in this space is basically, it's an enabler. Obviously, it's making a lot of things faster and identify hidden risk and all those things being said. It will be still be human reviewed, right? That's the approach, and that's the right approach, because it can go really wild and you will not be able to understand what is happening, right? Unless you have human in loop, which kind of tells that, okay, whatever AI is suggesting, can I make a decision out of it, right? Or can I feed back to the AI again that's saying, actually something went wrong, so that it can also learn and improve, right? So it's a process. And I think a lot of banks and bigger organizations are trying it, and they are trying to consolidate things in their end, so that data is connected well, they get the full picture, that get feed into the AI model, so that AI model is not biased and making a kind of sense which is not reality, right? Yeah. That it's looking at 3 data points and fourth it's predicting, which is not we want, right? We want to be, here is the information we got, I feed you in, you give me insight out of it, right? And then human will be sitting on top of it and reviewing it, and so that we are making a quality decision. So it's, can I really convert that into a glass box? Maybe through these processes, right? That, okay, we understand how it flows, what are the mechanism under the hood, how it applies, what are the algorithms and all those things. Can I tweak it? Do I have all the knobs so that I can change it and, make it as per my risk appetite, as per my regulatory expectation? Because I eventually, what is needed, if I got a risk and it's a true positive, for example, I need to report it, right? So if I'm filing SR or STRs, that's where it's really, what you understood from the model. And you're not really just saying, okay, because this is, I think, not acceptable, that because my model said it, it will not fly with regulators, right? Okay, my model said it, what I did on it, and what are my evidence, and hence this is a true positive. So that's how it works. So I think governance in that sense is very important. We need to keep the model grounded. There are various mechanisms nowadays, how you monitor it, and how you make sure that it's doing the right thing in a right way.
So you raised some pertinent points, Puneet, on that governance frameworks, which will be, I'm sure, applicable for all the organizations looking at implementing AI or whatever they are in their journey of AI evolution. We also believe in the 3 principles that we talk about in LexisNexis Risk Solutions, which is explainability, efficiency, and effectiveness. And explainability is the part that you talked about from a regulatory landscape as well, which is very important. But if we talk about, again, the practicality aspect of it, what would be your recommendation to our listeners and viewers of what does good look like? Like what is a well-prepared organization who's managing their trade risks effectively? What is that picture looking like to you?
Ankit, you touched on 3 E's, right? Which is really great. That's what we use at LexisNexis Resolution. There's one more point, which is ease of integration, which also is kind of 4th E, which we are now, focusing on, and that is very critical. And that is not for us, but also the organization we work with, right? And in trade-based money laundering, the organization which will, move forward, they need to also keep this aspect in mind, that how do we easily integrate, right? Apart from what we talk, because when we talk about AI models and all those things, there is a process, right, where ease of integration can play a critical role. But I think looking back and what goods look like, I think first we need to kind of work towards removing these data silos, right, which are present. So data present in multiple systems, how do we create those data like together and connect those systems, connect the dots so that, different data set, but linking to a transaction coming together, right, rather than individually siloed looked, right? So that's one. The second is within the organization, there are different pillars they work on, right? So let's say there is a payment operation team, there is a counterparty screen team, KYC team, right? Then there is a trade team as well, trade ops, trade compliance. So how does these pillars connect to each other? That's also become very important. And there are organizations I know that are working towards it to kind of consolidate these things so that they get a good picture. So in terms of combating the overall money laundering or trade-based money laundering, connecting these pillars together or the different organizations is super critical.
So just building on that, Pat, is there anything else that you would like to kind of add to that?
Yeah, probably. I'd say once you have that enterprise-wide governance in place, you have teams that can use this wider picture of a trade transaction, the available data sets. I think it's all about how you use this, how you run your investigations, how you detect anomalies within that activity. And one of the key call-outs I'd say is moving away from the use of static rules. One thing that's very clear, as I mentioned earlier, is the external environment is changing extraordinarily fast. And it's not going to be possible if you're operating off rule sets that are set one and done, and you're waiting for them to detect new typologies or unusual risks. Really, you need to look at how you can surface anomalous activity on a dynamic nature as the external environment changes, as the information at hand changes, in order for your wider investigation teams to be able to draw upon that intelligence that you're able to gather within the organization, and potentially through external analysis as well, which entails having up-to-date sanctions lists, having good corporate structure information, and of course being able to look at activity around the flow of trade and the physical movement of goods.
Yeah, I would like to end on this. Basically, I think the picture is how we move away from this siloed approach to a more collaborative approach. That is the key here, what goods looks like, if you really want to solve it.
So it's been a great conversation, and finally, when we kind of go towards the conclusion, we've talked about the challenges, we've talked about the tools that are available out there, we've talked about AI a lot, but if we kind of do some sort of crystal gazing, because that's what I like to do in terms of looking at the future as well, how are you seeing trade compliance and overall TBML evolve within the space in the next couple of years? We can start with Puneet and then Patrick, over to you.
Ultimately, in my opinion, the organization which will thrive should have strong data foundations and intelligence use of analytics with strong governance in place, right? Because that will enable them eventually to identify all those hidden risks and building those layers and identify the risk associated with overall trade transactions. We touched on a couple of points which around networks. So networks is something which is future, where you need to look holistically, as we touched on, right? Various data points coming in, various activities are happening, various events are happening, right? So are we able to look at a network level and look, okay, what is happening with this network of events, right? So that's one area which will evolve, and it's already evolving, right? People are looking into it and identify what is happening and what are the risks for me, or what is good network look like, right? So that's one. The second is kind of looking at the organization level, which I touched on. Financial crime compliance is a pillar itself, right? And then within that, maybe trade compliance, or maybe a separate pillar, right? How those two pillars come together, right? Because eventually signals are everywhere, right? And noise are also, right? So how do we connect those and make sure that we're getting the right signal, and they are on top of technology, applying technology on top of it, so that we already know what are trade-based money laundering signals. Given all those red flags which everyone knows around on the movements, on the documentation, on the entities or the organization or the behavior of movement, right? So what are those signals? If we know that, okay, I have sent MT 700 sometime, and then MT 103 goes, but they goes in silos, right? So how do we connect it? Because MT 103 is the payment is done, but before that MT 700 went, and there is some MT 202 also went, right? So are we able to connect it, or are we getting a full picture of it? I think that's where the things lies, and that's where you need to focus. Moving away again, making a statement here, moving away from silo to more connecting the systems together. And technology is really an enabler here, right? In many sense, being it connecting the data, being it connecting, identify hidden typologies or surfacing anomalies or identify patterns. So I think that's the areas where future look like, and and organizations are working towards that. They are embracing all these technologies and applying it in various aspects, starting maybe from transaction screening and then moving towards trade-based money laundering and all those scenarios.
Yeah, so just to build on that, I'd say the broader context which institutions now need to be aware of in a much more fragmented and multipolar world. You've got a lot of different payment rails. You have a lot of new and diverse ways in which value and values transferred and goods are shipped as well. And therefore, you need to take into account a much broader view on where these risks lie. And a key one is, of course, within blockchain and cryptocurrencies. So we're seeing significant increase in the use of various cryptocurrencies, privacy-preserving technology, as I mentioned earlier. With the rise of stablecoins as well, you see a lot more value being transferred through this instantaneous cross-border decentralized methods, and being the need to monitor more than just kind of your typical SWIFT networks beyond that. The hope is that there will be more regulatory mechanisms to share information, perhaps in terms of public-private or even private-private data sharing frameworks that can help you to analyze a bigger picture. But I'd say a very big element of this is, in a big data world, you now need very intelligent systems, increasing use of AI to be able to dissect that context and draw pieces of the puzzle together. Not all those pieces of the puzzle are perfectly available to one institution. So I'd say there's definitely an increasing need on the countering side of these types of threats to be able to share and draw upon this information to drive that intelligence and hopefully stop more illicit activity taking place.
I'm sure you guys enjoyed that conversation. There were some great insights and actual takeaways from that discussion with both Puneet and Patrick. As I said at the start, this is just the inaugural session. We have a series of videos and podcasts lined up for you within our trade series, so please do watch out for that. I think what was the key takeaway and what stood out for me personally was that trade risk is no longer about individual transactions. It's about understanding complex, interconnected networks across supply chain, ownership structures, and jurisdictions, which are just getting global in nature. And again, the fundamental shift was clearly around data not being siloed anymore, with the sheer pressure around the volume of data that is being gathered, the endpoint screening versus the whole screening around the trade journey. I think that's another key element that we need to take away from this. In fact, what we've also done is we've developed a white paper around the trade-based money laundering areas in Asia. It's developed with collaboration with Regulation Asia. It's a good read, so please go out there to our website, www.lexisnexis.com, into the insight sections, and please get a copy of that white paper for yourselves. Trade, as we highlighted, is pertinent from an APAC point of view, given the island nations, given the growing economies that we have. It's estimated that TBML, which is a deterrent to the growing trade flows and volume, is reaching to the tune of $8.7 trillion across the period of 10 years. So we need to work together to the PPP model to ensure that we are able to check these illicit trade flows. And more importantly, we also talked about data analytics, especially the evolution of AI and data modeling around it to address some of these challenges that we are seeing. That is just going to add to strength from an organization use and capability perspective. Again, organizations cannot be focused on transaction or an entity or a point-in-time transaction screening. They have to move to a holistic view around the whole trade life cycle. I think we've talked about that. And the advent of AI is just going to support and help with those processing of transactions. I hope you drew some insights as I did. It was a great conversation, and we'll be back with the following series. Thank you.